What's up, everyone, and welcome to another Bitcoin market update. In these videos, you will learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin, and also see where we are looking to buy and sell these cryptocurrencies ourselves. So let's get into it here with Bitcoin on the monthly time frame. So last month we had this bearish spinning top candle, and since the monthly open, we have started to trade downwards. It's not surprising because this candle, if you know how to read candlesticks, you would know that this candle typically comes at the top of a bullish run. And this is typically what we would call a bearish reversal candlestick. Now, bearish reversal candlesticks typically are telling us that the run that we had up is now going to come down and come to an end, in at least for the short term. So if we break the previous April's low here at 47K, that's where I have this blue line drawn, our monthly high will be set. And so we'll know that this is our monthly high, and then we'll look to come down and form a higher low somewhere above the September low here at 98.21. You can see that we had last month an increase in bear volume, which is not good for bullish continuation, but it does not necessarily mean that we can't break this high. The only way that bearish candlesticks end up becoming validated is if you break the low of that candlestick on the next subsequent candle. So this month, in the next 27 days and 11 hours, for this to become a valid high, we're going to need to trade down and go below this blue line. Now, we'll talk about the scenario that would end up leading to that being the case, but let's start off with the potential bullish scenario here on the weekly time frame. So on the weekly time frame, we had this bull trend coming up here, and if we know how to read trends, we're looking for that high, low, lower high, low, high, higher low, and then higher high pattern. So that's what we saw right here with a low, high, higher low, and then higher high. And we were starting to, as we were going up, decrease in strength. So as we were making these higher highs, we were making lower highs on the RSI, and then subsequently we had this little pullback here. Well, little, and it depends on what you consider to be little. We had about a 27% pullback, or roughly thereabouts. And subsequently, last week, we had a pretty bullish candlestick here. Now, what that candlestick did last week was validate a hidden bullish divergence here on the RSI. You can see the RSI made a lower low, but price indeed made a higher low. And so because it made a higher low in comparison to this one back here, this is telling us that this low has more bullish strength than this low, and therefore this is bullish. So for us to come down into this blue, we're going to need to have some sort of bearish candlestick this week, and then subsequently trade down below that in the next subsequent week, which is possible. Or what we could also see is we come up this week, and then the subsequent next week or so, we form a bearish candlestick, and then we come down and go below this low. That would be the bearish scenario. But the bullish scenario would be something like this, where we either, this is our low, and then over the subsequent weeks, we just come up and we form a higher high and go to new all-time highs. Or what could happen is we could end up coming up, forming a lower high somewhere above, or somewhere below this high, coming down again, but forming a higher low somewhere, and then coming up for a higher high, therefore changing the trend to be a weekly bull pattern once again, like we saw back here with higher lows and higher highs. So on the weekly and monthly time frame, our major resistance zone that we're looking at is this R3 pivot up here at roughly 63.2. After that is the R4 pivot, which is up at about 80K. The way this pivot indicator works, if you're not familiar with it, you can check out our video on how to use that. The way this indicator works is if you get a candle close above one of the highs, like we did right here, one of the resistance levels rather, the expectation is over time we're going to come and touch the next resistance level. And we almost did right here, came down, and then right here we touched it, and then we came down. So if you close below one, the expectation is you're going to go back down below to the next one as well. So we'll see what ends up happening here with this R2 and this R3. We're kind of inside of this little range here. Let's get a little bit more clarity on the daily time frame. So if we look at the daily time frame, there's a couple things to note here. First off, we have our resistance zone. The resistance zone is this 2-day resistance zone right here, this gray zone, where you can see if we move this over, we can see that on the initial test we came up, rejected off of this once, came up, rejected off a second time here. So we've had 2 rejections off of this level already. And this was our level back here when we had a bull trend that did not end up playing out as support right here. So we had our low, high, higher low, higher high, and then subsequently this gray level did not hold a support right here. We pushed through it, closed below it. That means when we come back into this level, it's resistance. That's what we got right here. Resistance again right here. And now we're subsequently most likely going to try and go back into this a third time and, push through it eventually. If we end up going above this level and closing 2 subsequent 2-day candles above this, this is going to be a very strong support level that I will look to go long on top of if that ends up being the case. But let's go down to the daily time frame and get a little bit more clarity here on what we're dealing with. So the daily time frame is interesting because what we had here was a sustained drawdown in price where we potentially were grabbing liquidity, meaning that we were triggering stop losses below this low and this low. So then we could have enough fuel, meaning enough stop losses getting triggered for us to go up again. And you can see that we've had kind of this V-shaped recovery right here, which is very bullish. And then we had a confirmed bull trend right here. So we had our low, high, higher low, and then higher high with these 2 candles closing above this key high. We came down. We didn't quite touch this blue support level. We came up. We made a higher high, but then you can see on the RSI that we made a lower high. And then we subsequently today broke down below the low of that daily low from yesterday. And now we confirmed that daily bearish divergence. And now we traded into the blue support zone. So this blue support zone, you can see that we're kind of jockeying between the gray and the blue support, the gray resistance and the blue support zone. So the blue support zone is our must-hold level. You can see if we pull up the Ichimoku cloud, we just got a bearish TK cross today for the first time. For the first time since way back here in like September. So that's significant. So if you're trading the Ichimoku cloud, the way that indicator works is if that ends up crossing bearish, you exit your long position. So you would have exited your long position today, and you can see that subsequently we're getting some bearish price action today, most likely from some Ichimoku cloud traders at least. The other thing to consider is this blue zone potentially not holding a support on the first test. So you can see we already wicked into this level once. And we're subsequently trying to go back into it now. It's really technically the first test of it, no matter what. But this push down in price, if we end up going through, we talked about this scenario yesterday. If we end up going through this level and closing below the 2 candles below this blue zone here, and we retest this is going to be a very strong resistance zone. And that likely will push us down below this, blue line that we have here at 47K because of this Ichimoku cloud edge-to-edge trade. So the way that the edge-to-edge trade works is if we get the TK cross like we did, the bearish TK cross, and then we get a candle close inside of the cloud, that is where we would go short, and then we would be targeting the bottom edge of the cloud, which would be anywhere where any of these edges, depending on the time frame on when horizontally we get into that zone. So if this zone doesn't hold a support and we go right through it, this is going to be a very strong resistance zone. So that's something I'm keeping an eye on. So on the daily time frame, I a few days ago I talked about how I was going to go long here back on May 2nd. But I took my orders off when I saw this candle here and the subsequent drawdown today. And the reason for that is because I don't really like longing the first support zone after a daily bearish divergence on the RSI, as well as the combination of this bearish TK cross, which I also don't like to see if I'm a bull. So this is what I would like to see for me to be bullish again on Bitcoin right now. So if we go to the 4-hour time frame, there's a couple things to look at here. So the first thing is, let's turn this off and let's look at this level right here. So this level right here was the resistance zone that I talked about on the Telegram channel. If you're not already part of the Lutheria Community Telegram channel, you can join that for free in the link in the description below. We have members from all around the globe in that Telegram community, and there's tons to learn. This was a trade that I talked about for educational purposes on that chat, and I talked about this trend right here with our low, high, higher low, and then higher high, and then we pushed right through this zone. Now, this should have held a support right here. You can see we almost held it as support, but then the next subsequent candle, boom, right below it, and we closed the next subsequent candle below it as well. So when we came into this level, this was now a resistance zone for us, and you can see that we had that bearish push off of there. That trade has already been, if we were, depending on where you entered the trade, if you entered it on the body of the candle, that would have been already a 2.47% trade, which is a nice one for the day. And then this trade, the thing about this trade is it could end up being one of those trades that leads us down with it, to that 47K level, if we end up going through this dark blue zone here. And so it's got a pretty good risk reward ratio. The thing to note is on the 6-hour time frame, this level is still valid as resistance and we haven't touched it yet. So if we come back into this zone, this gray zone, this is still resistance in my mind. And the reason for that is because on the 6-hour time frame, we haven't tested this 6-hour level where we had our bullish trend right here with our low, high, higher low, and then higher high. So this last candle where people were selling should have acted as support. It almost did, but then it did not, and we got 2 candle closes below this key low, meaning that now if we come back into the zone, that will end up being strong resistance. And so what I will look for is the next 6-hour candle here to either come up above into this pink line and then reject off of that, or close down below and then next subsequent candle, this gray zone being the major resistance level that we're looking to short, and we're targeting the bottom of that blue zone at minimum, because if we end up going down and trending bearish on the 6-hour time frame, then this will end up being something that will, if we end up trending bearish on the 6-hour time frame, we could end up going down to that 47K level over time. So for the bulls case, the bulls are going to need to push above this gray zone. This is the only zone that I care about now. So if the bulls can push above the zone and close 2 candles above the zone, I will once again be bullish. But until that point, I am not bullish. And so I will not be looking to buy anything until I see that change occur, which could be anytime over the next couple days. And we'll need to see the daily trend shift back into the bulls' favor as well, because now we just made a lower low. It doesn't necessarily mean that we're not in a bear trend by any means, but we're also in danger of closing below the daily pivot here, which if we close below the daily pivot, that'll just add confluence to that level, because the daily pivot is at about 56.6, and if we go down on the 6-hour time frame, 56.6 is right there, right inside that gray zone. So that'll be a very strong resistance zone that if we close below, where it's already a strong resistance zone, but if we close below on the daily time frame, it'll be an even stronger resistance zone. And this is also a confluent trade with the monthly time frame, because the monthly time frame is bearish and this is the highest time frame. We do have to be aware that this is still this is a bearish candlestick, and until this is invalidated, we have to treat that as such. And so What that means is on the 6-hour time frame, that's what I'm watching, and until we get above that level, I am going to be watching to make this trade. So that's all I got for this one, guys. If you like this video, give it a like down below and subscribe for future educational content around cryptocurrency and blockchain technology. And also check out our beginner technical analysis course that we just released on lutheria.com, which you can learn all of the foundational elements of technical analysis, such as reading volume, reading technical indicators like the RSI, analyzing bullish and bearish trends, and several other interesting topics as well. So check that out, and until next time, onward and upward.